Welcome to the Mid-Market Edge podcast, where we uncover operational insights for private equity-backed portfolio companies. I'm your host, Kevin Bonfield, and over the last 30 years, I've had the privilege of working with fast-growing entrepreneurial teams, helping them scale, tackle challenges, and seize new opportunities. On this show, we'll talk to industry experts and seasoned leaders who will share practical strategies to drive growth, boost efficiency, and create value in the mid-market. Get ready for an insightful, engaging conversation that dives deep into the real-world issues facing your business.
Welcome to the Mid-Market Edge podcast. Most owners spend years building a business that runs well, and very little time thinking about building a business that transfers well. They're not the same thing. Now, there are different ways to exit with a business once you've been building over time. And it's fine if your objective is to think about perpetual ownership or transferring into an ESOP. But for many people, there's consideration about how to move through that transition and monetize the business that you've been working so hard to build over a period of time. And if you do want to do that, it's critical to understand what the enterprise value is of your company, how it's changing, and what characteristics make a difference when it comes to sale. It's like showing up for a test and perhaps not knowing the way that it's going to be graded. And so the gap isn't just strategic, it's financial. It shows up in valuation discounts, deal structure, the time that you take on the market, and it shows up in deals that fall apart as you wander or move through due diligence. My name is Kevin Bonfield. I'm the founding partner of Consenter, and we work with founders and PE-backed portfolio companies as they navigate that growth and transition. And for me, one of the things that I kept on saying was this difference between businesses that were built for sustainability and to run, and then what the differences were that took a business from something that was sustainable and generating cash flow to an asset that somebody else wanted to buy. And that's what this series is all about. It's all about that preparation that founders and business owners need to go through so that they're ready for that exit process, because it's fundamentally different to running a business. The skills that you need are different. And the pieces that are going to make a difference are understanding what the process looks like, the advisors that you use as you go through this path, and the way that you prepare the business for sale. So let's talk about what the problem is, where the challenge comes for business owners. Roughly 3 in 4 owners say that they are wanting to exit sometime over the next 10 years, but only a few have actually taken the concrete steps and thought through what it's going to take to move through that readiness phase. Almost 4 in 5 companies don't have a formal transition advisory team. Only about 30% of founders have a written estate plan. And these aren't minor administrative gaps. They're big deal risk gaps and can make a massive difference in terms of what you expect to get out of this business that you're selling versus what it is that you ultimately get when you get through this post-tax. For most businesses, for most founders, the majority of their wealth is tied up in that business. And so it makes a lot of sense to think about how to go through this process in a thoughtful way. The other piece that drives being prepared for a transition is that roughly half of all business exits are involuntary. They're forced by death, disability, disagreement, financial stress, divorce. And that means for many owners, the choice of when should I sell is not really a choice at all. It's forced upon them. And then the last piece is that even when you are ready, the process itself is often longer and harder and more mentally draining than most owners expect. It typically takes 7 to 9 months, with the clock starting when you get an advisory engagement. And one of the things that you're going to hear as we go through this series is actually thinking about the time before you get an advisory engagement and starting to think about how to build this business over time so that it is ready to move through that transition process. There are 3 gaps that I see, and I see these consistently, and we talk about them as we go through this podcast series. The first is that there's a gap between performance and transferability. There are things that really drive the difference between a business which is cash flowing and generating income for an owner and an asset that somebody wants to go and buy. And those are things like owner dependency, customer concentration, undocumented processes, a shallow management bench, which again is kind of connected to the owner dependency. What we see is that buyers aren't just buying earnings, they're buying the continuity and the expectation that this business is going to continue into the future. The big question here is, does this business work without you? And if the answer is no, then it's going to be very difficult to get the kind of price that you're originally expecting. The second is that companies that operate well in the owner's head, but not through metrics and clarity, can also be difficult to get into the inside of, because if you don't know what the key elements are that are going to drive value and whether those elements are moving in a positive direction, it doesn't give confidence that the asset that's being bought is one that's going to have a long-term value to the new owner. The next one is that there's often a gap between the diligence reality and what owners expect. They don't know what it looks like to have a properly structured data room, financial restatements that include add backs, perhaps even going through a seller-focused quality of earnings assessment in advance of coming to the market. Well, once they get into the process, they start to see the challenges writ large as due diligence starts and professional buyers start to get into the middle of the business that you're trying to sell. And then one of the last pieces is, and we talk about this in a couple of the episodes coming up, is the owner's readiness. And it's not just the business, it's that over time, often owners and founders have put a large amount of their identity into the connection between who they are and the business that they have grown and nurtured over 5, 10, 20 years. And so they get to the end of that sale process, that transition process, and they're left wondering, well, who am I? What do I do next? And am I ready for that? So we've structured this series in a similar way that we've done with other mid-market edge podcasts. We focused entirely on this arc of preparing for sale. And as with similar series that we've done on building your global edge and intelligent integration, we tend to look at it from a range of different perspectives. So we talk to founders and entrepreneurs that have gone through the sale process and have transitioned their business. We talk to a founder who built up their business, went through the sale process, and then ultimately decided to retain their business and then move into an executive chairman role for the long term. We talk to accountants. We talk to people who are process experts. We talk to people who build the culture within organizations so it's ready to move on. And so we have multiple perspectives in this podcast series, and you'll start to see all of those experts coming together and getting insight into what it takes to bring a business, have it prepared effectively, move through the process and successful transition. I do want to thank all of our guests. Each time we run one of these podcast series, one of the things that I get out of it is just some fascinating discussions. It helps me with my thinking around the topic, getting to speak to people who have been in deep and are experts in what it is that they do. And sometimes it reframes the way that I'm thinking about something. And in this particular case, this podcast series does all of those things. I'm excited about that learning process that I went through as well. And there are a few things that I got out of it. One of them is that I come to the end of this, and I think that a sell-side QOB is one of the most important things to do for every business which is about to go through that transition process. And an audited and well-structured data room, so that the information is available, it's locked down, and it is available quickly to a buyer, so that trust continues to be built through the process rather than there being gaps as you move through. And then one of the last pieces is being clear on what your identity is and uncoupling it from the business that you are ready to move on with. So building a great business and building a sellable business are related, but they're not the same discipline. This series is all about thinking through how to close that gap. Ultimately, while we talk in this series about preparing to buy or preparing for sale and having your business ready for that, one of the things that I've come to is that there's a big difference between preparing for sale and having a business that is built to buy by the next owner who's going to take it to the next level. Thank you very much for listening. Our podcast series is going to start next week, and we've got some fascinating conversations for you here on the Mid-Market.
Thanks for tuning in to the Mid-Market Edge podcast. For more information, visit the Mid-Market Edge website at midmarketedge.com. Details are in the show notes. Remember to subscribe and like the show so you'll never miss an episode. And until next time, keep building your edge in the mid-market.